Welcome to JAKS Weekly Updates from 11th September to 17th September 2016. Let's go through the updates. First one, Government notifies the applicability of 19 sections relating to goods and service tax from 16th September 2016. The central government notifies the applicability of Section 1 to Section 11 and Section 13 to Section 20 of the Constitution 101st Amendment Act 2016 from 16th September 2016. The Government of India, through its order dated 15th September 2016, has notified constitution and composition of GST Council. The Council consists of Union Finance Minister as the chairperson and the Union Minister of State in charge of Revenue or Finance as the member, and the Minister in charge of Finance or Taxation or any other minister nominated by each state government as other members. The next update, CBDT clarifies due date extension applicable to accounts audited under Section 44AB. The Central Board of Direct Taxes, through order under Section 190 Income Tax Act dated 9th September 2016, has extended the due date for filing of income tax return by the taxpayers whose accounts are audited under Section 44AB and who are required to furnish the returns of income for assessment year 2016-17 by 30th September 2016 as per the provisions of Section 139(1) of Income Tax Act from 30th September 2016 to 17th October 2016. Section 44AB of the Act stipulates that the accounts are to be got audited by an accountant and furnished in the prescribed manner before the specified date. The specified date has been defined to be the due date for furnishing the return of income. Therefore, the extended due date will also apply for the purpose of Section 44AB also. The next update, introduction of IEPF Accounting Audit Transfer and Refund Rules 2016. The Ministry of Corporate Affairs has introduced rules for Investor Education and Protection Fund with effect from 7th September 2016. It has laid down rules regarding management of IEPF, the manner in which funds shall be managed, reported, accounted, and how the unclaimed shares and dividends shall be transferred to IEPF and the procedure through which the shareholder can claim the refund. The next update, introduction of Companies Mediation and Conciliation Rules 2016. Section 442, which was issued on 1st April 2014, authorizes central government to maintain a panel of experts to be called as mediation panel for the mediation between parties during pendency of any proceedings before regional director of central government or tribunal or appellate tribunal. On 9th September 2016, the Ministry of Corporate Affairs has come up with these rules, which provides rules and guidelines for empanelment as mediators or conciliators. The next update, amendment to Schedule 5 to Companies Act 2013. Where in any financial year during the currency of tenure of a managerial person, a company has no profits or its profits are inadequate, it may, without central government approval, pay remuneration to the managerial personnel not exceeding the limits specified under A and B. So the limits under clause A will be, where the effective capital is negative or less than ₹5 crore, the limit of yearly remuneration payable shall not exceed ₹60 lakhs. Where the effective capital is 5 crores and above but less than 100 crores, the limit of yearly remuneration shall not exceed 84 lakhs. Where the effective capital is 100 crores and above but less than 250 crores, then the limit of yearly remuneration shall not exceed 120 lakhs. Where the effective capital is 250 crores and above, the limit of yearly remuneration shall not exceed 120 lakhs plus 0.01% of the effective capital in excess of ₹250 crores. These limits shall be doubled if the resolution passed by the shareholder is special resolution. No approval of central government is required if certain conditions are fulfilled. That is, if a managerial personnel is function in a professional capacity, such managerial personnel is not having any interest in the capital of the company or its holding company or any of its subsidiaries directly or indirectly or through any other statutory structures. Such person is not having any direct or indirect interest or related to the directors or promoters of the company or its holding company or any of its subsidiaries at any time during the last 2 years before or on or after the date of appointment. If such person possesses graduate level qualification with expertise and specialized knowledge in the field in which the company operates, provided that any employee of a company holding shares of the company not exceeding 0.5% of its paid share capital shall be deemed to be a person not having any interest in the capital of the company. The next update, standardization and simplification of procedures for transmission of securities. SEBI has issued a circular which simplifies the procedures for transmission of securities. The document requires the securities held in single name with a nominee in physical mode are duly signed transmission request form by the nominee, original or copy of death certificate duly attested by a notary public or by a gazetted officer, self-attested copy of PAN card of the nominee. Additional documents required for securities held in single name without nominee are affidavit from all the legal heirs made on appropriate non-judicial stamp paper to the effect of identification and claim of legal ownership to the securities. In case the legal heir is named in the succession certificate or probate of will or letter of administration, an affidavit from such legal heir alone will be sufficient. For value of securities up to ₹2 lakhs per issuer company as on date of application, the documents required are succession certificate or probate of will or letter of administration as may be applicable in terms of Indian Succession Act 1925. In the absence of the documents mentioned before, a no objection certificate from all legal heir executed by all the legal heirs of the deceased holder not objecting to such transmission, or copy of family settlement deed duly notarized, and an indemnity bond made on appropriate non-judicial stamp paper indemnifying the issuer company. For value securities more than ₹22 lakhs per issuer company as on the date of application, documents required are succession certificate or probate of will or letter of administration as may be applicable in terms of Indian Succession Act 1925. So that's all the important updates for the week. Have a nice day. Thank you.